Good morning, traders. Richard here doing quick Ichimoku cloud chart market review of the S&P 500 index. We start with the daily Ichimoku cloud. After slicing through the bottom in the cloud here, a short position opened up and a shorting opportunity opened up, with the market then selling off heavily and now close to testing the support zone, these support zones here of June, the June lows. Now, interesting, this looks very much like a downward continuation pattern. It's almost complete. So there is the possibility for a shorter term relief rally or rebound rally from this cluster of support zones between 3671, 3634 and 3601. There is downside risk to 3,500 downside cloud chart downside target. Now that target level comes from the monthly Ichimoku cloud. You can see here the front end of the cloud is really flatlining. 3503 is a support zone. We lost support at the front end of the cloud here, both at the 4136 as well as 3972. And now it's slicing, retesting these highs there of 2020 third quarter, and there's downside risk to 3,500, 3,600 and 3,500. So keep that in mind. That's on the monthly Ichimoku cloud. You can see the market corrected after a beautiful sell signal up here at the 4,000s, after it became very extended from the top end of the cloud, and then the correction continued. Looking at the weekly, still a nice bear market rally going on as price actions below the cloud, and market on its way to test these support zones here. We can see this cluster of support 3601 is a key support zone, and then that 3,500 that we get off the monthly is another support zone to watch out on the weekly. Any kind of relief rallies from support rebounds here will be met with resistance at the bottom end of the front end of the cloud. So all these levels here are front cloud resistance zones. So any kind of relief rally back up to the bottom end of the cloud, front end of the cloud to watch out for, as well as the standard line. That purple line would probably catch up with that front cloud resistance zone. So 3972 as well as 4,000 would be a major resistance zone on the weekly Ichimoku. Now, if we turn to the 4-hour cloud chart, you have some idea what's going on intraday. You can see, let me just refresh the data. There we go. You can see it sliced through the bottom in the cloud. There was a major sell signal up here on the 4-hour, and then another sell signal, a short selling signal or so at the bottom in the cloud here, as well as that one there. Taps open, price action below the cloud remains bearish, and we can see how far we've got to go to get to the 3,600 and 3,500. Not long, but certainly downside risk remain in play. Any kind of potential rebound will be met with resistance at the bottom end of this front end cloud chart resistance zone. For the market to be back in bullish territory, we need to be back above the top end of the cloud. So bearish on the 4-hour, bearish on the daily, and bearish on the weekly Ichimoku cloud, with long-term downside targets of 3,500 and 3,600 over the next couple of weeks. Now turning to the hourly Ichimoku, let me just move. Ichimoku cloud, you can see here, looks like the market wants to rebound from this support zone here. Will be interesting to see if this support's going to hold. The resistance zone will then be this 3710 to get through, and then the front end cloud resistance here on the hourly. That's also another zone to get past, as well as the standard line of the cloud and the top end of the front end of the cloud, 3810. So two levels to watch out for on the hourly is this front cloud resistance zone 3726, and then the other one is the top end of the cloud there, together with this standard line of the cloud. So that's the upside risk targets on a potential rebound on the hourly Ichimoku cloud. Until next time, happy cloud chart trading. Bye for now.